we talked about this last week, but what expires at the end of 2025 with the Tax Cuts and Jobs Act?
Yeah, that's pretty interesting because this is not being talked about that much in the election process here.
That's true.
And it's kind of a big deal. If you look, 2017, we put together, these new tax tables and new tax cuts. We got a kind of a comparison here we can show you for, what's going to expire, so to speak. They
Yeah.
call it sunsetting. And so we're going to go from a 37% top bracket to back to, in theory, if they don't do anything, to a 39.6. Okay. There's a pass through for income deductions that you're allowed up to 20% right now. That's not used. We don't have any of our clients using that.
It's more for business owners.
Right.
And it's self-employed people.
Right. The child tax credit will drop back down to $1,000. That can be a big deal, right? That's important because that's a credit, so it's kind of nice. And then the standard deduction, and this is actually maybe a really interesting piece. So it goes from 24,000 married filing joint back down to 13 again, for example, and single filers go from 12 back down to 6,500. When they moved up from 13 to 24, it was incredible. I think it was something in the neighborhood of 40% less people needed to itemize. It was pretty high. Matter of fact, it dropped it down to the number of people needed to itemize to a pretty small amount as far as that goes. And so that will be interesting if they drop that back down because then you're different strategies maybe for charitable giving, different things along those lines.
Yeah, and one of those deductions that itemized deductions that kind of fell out of favor was the SALT one, which is state and local income tax or taxes essentially. And so the deduction was capped at $10,000, but that deduction is the limits on that deduction are going away. So for higher tax states like California, where you can have high income tax, that is really beneficial.
Yeah, we used to be able to write off whatever you paid, for the property tax, for example,
Yeah.
And whatever you paid for state taxes, which was, can be a big write-off depending on your income level and where you're at. And let's say it was 75,000 you used to be able to write off if you added everything up, and it got capped back down to 10. And so that was kind of punitive after the higher tax states and what have you. So that expiring, that's actually a really good thing.
Yeah.
However, the tax tables are changing, the standard deductions are changing. So there's some increases to go with that, offset of decrease. And so there's some other charts here kind of interesting. This a little hard to see all this, and there's another graphic I have after this, but it just shows kind of the brackets and the projected bracket if they let it expire, right? And so it's projected because there is some increase that happens
with just inflation,
right? With inflationary, and whether who knows what Congress is actually going to do, right? But in theory, they might want to go down that path if they are going to let them sunset here, and maybe everything stays the same, but if you look closely, what you can see is basically, for the most part, you're going to end up with a bit higher tax here. Maybe there's some offsets with the SALT piece going away and what have you, too.
Yeah, it also depends on where you fall. If you fall in the 32 or 35% brackets,
right,
your brackets are kind of getting smaller, but you'd have kind of a similar, tax rate.
Yeah, and this is a pretty cool chart here. This shows the blue line is where we are now, right, in terms of the tax rate. And income levels, right? The orange line is if they sunsetted it back to the projected, levels. And so if you're single and you make between 200 and 500,000 by chance, you'll actually pay less tax under the
post tax.
Revised back to sunsetted levels. You'll pay more if you're under 200,000 and more, and that's orange, part of that chart, and more if you're, above that 500,000, might be 550 or what have you. But so that's kind of fascinating. On a joint filing tax basis, which is the next chart over here, you're going to pay more, at least from the table standpoint, almost all the way across.
Yeah, but this is not going into like there's a lot more deductions that were kind of limited with the Tax Cuts and Jobs Act. So a lot of them are coming back. So one example is mortgage interest deductions. So with the Tax Cut and Jobs Act, it was limited to 750,000. So that's reverting back to $1 million. So you
Yep.
can take interest
Yep.
off of $1 million now.
So if you can increase your mortgage interest deduction, you can increase your write-off for your property tax and increase the write-off for your state taxes. So this chart's kind of showing the gross, taxable,
Yeah.
taxes go up. Your
So
net taxes after those deductions, it depends on your deductions. Yeah.
yeah, one thing that's not really shown in these charts is because these are all kind of like tax rates for your gross income is the changing of the state tax laws. So state taxes were essentially doubled, or like how much you had a tax credit for, and with they'll expire, and so right now it's at $13.61 million per person, but it's going to get expire and revert down to $5 million that's inflated. So people are projecting about $6.4 million of tax credit per person.
Yeah, and that's kind of significant because, if you had 13 million per person, that's what 26, 27 million,
Yeah.
dollars that you could pass to your heirs without any tax. If they sunset that, we go back to, and this is a projection, because it was at 5 something like you said, and the projection is 6.4. So now you've got maybe 12.8 million that you can pass. Again, for a lot of people out there, that covers it.
Yeah, it covers the vast majority of the
But if
population.
you happen to have like a 15 or 20 million dollar estate, you just went from being covered to being exposed.
Yeah.
So it'll matter to somebody, believe me. And so that, but that's actually a big piece too. And so all of these things could doesn't all have to sunset. They could keep some, they could sunset some, they could change some. I think this is going to revolve around a whole tax, scenario, corporate tax, individual tax. We're going to get probably another 2017 type debate going on about what should happen with the taxes. And then the Congress makeup will be a huge deal here. Is it all one party or not, right? Does it all line up with the White House or not? Or is it a bifurcated Congress? Because that could make a huge difference too as to what actually happens.
I could see a bifurcated Congress, nothing being done and kind of just laying
Yeah,
go.
then you get the sunset because nobody can agree on, what else to do. There's no negotiated ground. So taxes are kind of weird. I often have seen, I think, a bit more on the negotiation side on the tax thing. But yeah, we'll see. That's not been true for this particular Congress. That's for sure.